Will great vaccine news make the RBA boss break his 3-year promise on interest rates? Should you expect the stock market to rise in 2021? And Paul Rickard thinks you want to hear about hybrids and aristocrat leisure. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, Paul, the news on vaccines, really good. Pfizer, 90% effective. Moderna, 94% effective. This has to improve the economy next year. And if the economy goes really well, inflation goes up, the Reserve Bank governor will have to break his promise, the 3-year promise, that the 0.1% cash rate stays where it is. What do you think?
Well, you're positive, Pete, right? And I reckon it's going to take a lot longer for everyone to be vaccinated, Peter. But look, it's good news. I guess two things. First of all, is it a promise? The 0.1%. We're not going to move the cash rate.
That's right. It looked like a promise, but as George Costanza said, it's not a lie if you believe it when you say it.
I don't know why the governor needed to say it, right? I just think it's news grabbing. And secondly, Peter, I mean, look, I think it's going to be a lot more challenged than, as I've already said, in terms of getting the vaccine out and all this good news. But we'll see. I think there's still a chance, Peter, in Australia, because the trend for interest rates has been down.
Yeah.
We can't rule out negative interest rates yet in Australia. I hope not. But, you know, what's been shown overseas is that lowering interest rates has almost no impact on economic growth. And, you know, that's all part of a club, the RBA club, central bank governors clubs. We're all macho. We all want to be doing something. So I don't think we'll get negative interest rates, Peter, but let's not rule it out.
Okay.
So I'm positive, Pete,
there's one really important observation you have to realise, everyone out there watching Paul Rickard, he's been watching the ABC on the sly. To be so negative about vaccines, you must be watching the ABC. Admit it.
I admit it. I've been watching some ABC. I've had my quota of ABC-ish.
I love the ABC, but I'm too scared to watch it. This one, Paul, ring the bell. Should we expect the stock market to rise?
I'm going to agree with you, Peter. The market is going up, right? This is the impact of zero interest rates that we have now globally. Look, we're going to have ups and downs, but the market is going to keep rising until there's something to actually put a bit of pressure on interest rates. That could be the vaccines.
Yes, exactly.
As you said, your first point, but I think we're still going to be in that cycle in 2021.
I think it's vaccine positivity, plus unbelievably low interest rates, plus unbelievable stimulus. And I think the fact that Europe and the US and the UK have gone back into lockdown means that those governments will actually spend more stimulus to get over that sort of 6-month problem they'll get. And that means that by the second half of this year, if the vaccine news is better than what you implied, well, we could see inflation starting to kick towards the end of next year, and then Reserve Bank governors will have to raise interest rates, but the stock market will love it.
But it won't be all one way, and I think the US is going to have its all-time high, or the Dow's just so close to 30,000, which of course is, that's a big number to celebrate. But we're going to have we've still got to get through this whole sort of transition period. We've got 2 senatorial races in Georgia, which will put the Senate up for control again. I reckon there's going to be a few more downs.
There'll be buying opportunities.
Buying opportunities. You don't need to rush into this. We've had a nice big rally, but look, I think we're in the sort of the vaccine glow at the moment, but we're going to see some more negative news shortly.
Vaccine glow, I love that one.
Yeah, like that. I'm not sure if vaccines do glow, but anyhow, they do something.
Okay. Believe it or not, this guy.
Maybe it's the person who has the vaccine. He or she glows afterwards. What do you think?
It could be that. But the important thing is this guy thinks you want to hear about hybrids, Paul.
Yeah. Well, you'll know what to invest in, Peter. I know the audience. Some would say better than someone else. Sitting very close to me. But anyhow, look, 2 hybrids on the market out there. The Westpac issue paying 3.4%, NAB's paying 3.5%. I reckon they're going to be in high demand, Peter, because term deposit rates are now so low.
Okay.
But as we always say in these programs, never invest in something you don't understand. And if you don't understand hybrids, go to great sites like read my brilliant article in Switzer Daily tomorrow, or go to the ASIC Money Smart website. That can help you. It's high risk, but if you want to get high return, you've got to take a bit more risk.
In simple terms, just take the Westpac one. What's the deal? You're going to get a base rate plus something.
The base rate at the moment is about 0.002, so it's very, very small.
That's the base
but
rate.
You'll get about 3.4% as a gross rate for the next 90 days. And if interest rates go up, that'll go up. Interest rates go negative, it could go down. But I think you could probably factor in that.
Are they 100% safe?
No, they're not 100% safe because they're right at the bottom of the food chain. So if Westpac has a problem, or banks have a big problem, then you could lose capital. Yeah. And also, there are market securities, so they've got a market price. And as we saw during the big sell-off in March, the prices of hybrids, they got hammered temporarily. So you can have all those impacts,
temporarily, unfairly, but it happens in the market.
It happened. And, some people sold out, did crazy things and panicked, right? And they've come all the way back, right, as you'd expect. But they're not like a term deposit, no government guarantee, a lot more risk, but they'll provide a high return, and I think they'll be popular. Last one I talk about is Aristocrat Leisure. That reported this morning, Peter. I think there's we like the stock. Look, there's some negatives in the report, obviously, because it's been impacted by COVID-19. But what the market's going to like is actually paying a small final dividend. The only reason to pay a small final dividend in these circumstances is to say we're okay. Balance sheet is strong. We're pretty confident about the future. Market will like that. No outlook statement.
A lot of people don't like gambling stocks, but a lot of the experts in the market think this is one of the best ones in the world. And basically, as the world heads towards normalcy, this will be a reopening trade stock that will do pretty well. I'm Peter Switzer.
I'm Paul Rickard. We're mad about money.